What's up, guys? Stas here. So we have two companies to break down in this video that just reported earnings, and let's just say, man, their stocks are getting destroyed. So we're going to break down the charts, the earnings, some highlights here, my thoughts. So if y'all find value, hit that like button. Please make sure to subscribe, guys. It's free, and you might as well follow me on X as well, at Stas Talk Stocks, and feel free to get your free stocks from Moomoo, link down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat, and you get a free share of SoFi stock as well. It's a no-brainer, guys. We'll talk more about the details later. Again, link down below. And with that being said, cheers. Let's dive right into the video. So it's currently about noon, 12:30-ish on the East Coast, so we're halfway through the day here, and the indexes are all in the red. We have the Russell down 1.2%, the Nasdaq's down 0.3%, the S&P's down roughly 0.3%, and the Dow's down, funny enough, 0.3%, as well as the VIX is at break even, and we have the metals. Let me see here, guys. Gold is down about 0.75%, and we have silver up around 1%. So yeah, everything is pretty much in the red except for silver. And let me see what oil's doing today, guys. Quickly, let me pop it up, and then we'll break down these companies, these stocks. Looks like oil's down yet again, 2.5%. red on the day so far. It's at $75 a barrel. Now it's down $20 from the recent high, or around 20%. So oil is officially back in a bear market after going up for a couple months straight. You guys can see here, oil was at about $67 a barrel back in the end of June, and it ran all the way to $95 a barrel by the end of September. So it had a good 3-month run, and now we've pretty much given back not all the gains, but a lot of the gains on crude oil, which maybe I'll make a video as to why I think this is happening, but we're not going to get too much into that in this video. So with that being said, now that we got a little baseline on what the heck's going on today, guys, everything's in the red pretty much, except, again, like I said, for silver. Now we can talk about these two companies that are not looking good at all. Their stocks are not looking pretty, guys. So the first one is Robinhood. You guessed it. Maybe not. I don't know. But Robinhood stock is down a good chunk right now, over 13%. And this is pretty much right back to the lows from about 6-7 months ago. Back in April, May, March, we were at about $8.50. And right now, we're pretty much right back at that point, down $1.30 today, down 13% on the day. And now Robinhood is down from $13 back in July to where it is right now. So let's just say it has not been a pretty past couple of months for Robinhood stock. It is down almost 40%, deep in a bear market as of right now. So again, we're testing a big level of support right here, which by the looks of it, man, to be honest, it wants to break. I'm not going to lie. We have a descending triangle heading, pretty much clear as day here on the 4-hour chart, and we're heading towards that lower $8 level right now. So if we do break that point, all-time lows could be right around the corner for Robinhood, being right around $6.87. We could be going right back to those all-time lows, in my personal opinion. So Robinhood, I believe they beat on revenue. I have a bunch of other metrics here that we're going to talk about today, guys. So actually, no, they beat on EPS. They did -9 cents EPS, which beat the -10 cents expected, but they missed on revenue. Revenue came in at $467 million versus the versus the $478 million. So they missed by about $11 million on revenue. They slightly beat on EPS, and when it comes to their other metrics, let's just say they're not looking so pretty, guys. So let me read this to you. So Robinhood reported fewer monthly active users, which fell 16% year over year to 10.3 million in the third quarter from the same period last year. So that is not a good sign. Whenever you're seeing monthly active users go down over 10% year over year, close to 20%, yeah, not the best sign at all. And although third quarter revenue rose 29% to $467 million, it fell short of the estimate, and its net losses narrowed to $85 million or 9 cents a share, which is nice. That did top the analyst estimates like we talked about, but revenue was also hurt by a 13% decline in third quarter transaction revenue tied to stock trading compared with the same period last year. So, of course, you guys know retail investors, yes, we're still out there. There's a lot of retail investors out there, but they've come down big time from 2020, 2021, when everybody was locked down in their home or in their house, apartment, whatever, and they had a lot more time on their hands, right? They were like, oh, back then, they were like, okay, let me just pick up stock trading. Let me try investing for the first time. They downloaded Robinhood, and a lot of those people, let's be honest, are no longer in the markets. They closed their Robinhood accounts, abandoned their Robinhood accounts, completely quit the stock market. And yes, there's still a lot of retail investors out there, but they've come down a good chunk over the last couple of years. And crypto trading, are you guys ready for this, man? Crypto trading dropped 55% year over year. Options trading was unchanged, and that translated to an overall decline of 11% in their in its transaction-based revenue. So the fact that crypto trading collapsed is unbelievable, and I never understood, to be honest, why people buy and hold their crypto on Robinhood. It makes no sense. Sure, if you're trading it, you're getting in and out, making a quick trade, that's different. But there are people that buy and hold their crypto, let's say Bitcoin, for example, and they hold it on Robinhood. To me, that's just the dumbest thing ever. You're better off just going to an exchange. I don't know what exchange. I'm not going to say an exchange here, but let's just say one of the reputable exchanges. You're better off just buying it there and putting it on a cold storage wallet. You guys know what I'm saying, even though I can't talk today for nothing. You know what I mean? It doesn't make sense to me, but people do what they do, and 55% drop in crypto trading year over year is pretty intense. So Robinhood stock, guys, I've never liked it. I've been vocal about this ever since they went public a couple years ago, and I told you guys I'm not touching it with a 10-foot pole, and this is exactly why. They went public. There was some hype. It went to $85 a share. And here we are, guys, down 90%. We're at $8 a share now. Unbelievable. So the next one that I want to go over here quickly, guys, is WBD, also known as Warner Brothers Discovery. Their stock is down even more than Robinhood stock today. It's down 16%. So they ended up doing a loss of 17 cents versus the 6 cents expected. So they lost even more money, way more money than expected, which is not good. And revenue came in at $9.98 billion, which came right in line with the expectations. Not too bad there for revenue. And Warner Brothers Discovery reported a net loss of $417 million for the quarter, which was an improvement of, oh my goodness, last year they lost $2.31 billion. Holy smokes. So yes, losses are narrowing big time from $2.31 billion to now $417 million, but still, guys, they're losing money hand over fist, right? And their most recent results reflected dire trends in the legacy media industry as ad revenue in Warner Bros. Discovery's TV network segment fell 12% compared to a year earlier, reflecting a decline in audiences for general entertainment, news programming, as well as soft ad trends in the U.S., according to the company. Of course, this is a more legacy media oriented. I mean, they do have streaming, right? But they also have the legacy side of their business. Yeah, not looking so good, guys. It's declining, and that's probably going to continue. If I had to guess, if I had to make a bet, that segment will continue to decline over time. I mean, not straight down in a line over the next year or two, but over the next decade, yeah, I think it's going to continue to decline. And the company reported 95.1 million global direct-to-consumer subscribers, a 700,000 decrease from the previous quarter and less than the analyst projection of 95.4 million subscribers, according to Street Account. So this stock, guys, along with Robinhood, not looking pretty at all. And if I had to invest in one of them, man, that's tough, actually. I'm putting myself on the spot. I don't even know, to be honest. But probably Warner Brothers. I'm not going to lie. I'd probably go Warner Brothers Discovery. They probably have more bounce back potential long term. But, I mean, we're not going to get into the nitty gritty of that in this video. But overall, guys, look, this stock down 16%, completely collapsing now towards the lows from a couple weeks ago. We're at the bottom of this channel yet again. This is not looking good at all for Warner Brothers Discovery. I mean, sure, if this thing gets down to $8.50, $8, maybe it gets very stretched to the downside, maybe I'll pick it up as a bounce back trade, maybe a relief rally candidate. But as of now, it is not looking good at all, as the business itself, at least part of it, is struggling. Sure, they could bounce back. I don't know. Never say never. I'm not betting on that segment bouncing back. But yeah, they're struggling. For sure, Robinhood arguably even worse. It's down big time on the day. It's now near the all-time low. So what do you guys think? Let me know your thoughts in the comments. And full disclosure, I don't own Robinhood and I don't own Warner Brothers Discovery. And to be honest, I'm probably never going to own these stocks. Maybe I'll trade them here and there. Maybe. Totally possible. But as a long-term investment, guys, I'm just being honest. I'm probably never going to own these. But either way, I figured let's break down the news, what's going on, the charts, all that good stuff. So if you all found value in this video, hit that like button. Make sure to subscribe. It's free. Follow me on X as well at Stocks Talk Stocks. Link down below. And if you guys haven't gotten your free stocks yet from Moomoo, what the heck are you waiting for? Use that link down below or go to stocksurfest.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, each of which could be valued up to $2,000, and you get a free share of SoFi stock on top of those stocks. And listen to this, guys, fund your account with at least $1,000 on top of those 6 stocks you already got. You get 10 more stocks, totaling 16 stocks, each up to $2,000. And the clock's ticking, guys. This promo is a limited time, so get on it. Use that link down below. And with that being said, guys, cheers. I'll catch you all in the next video.